Hey, good morning. Let's go over today's trade plan. So in the overnight session, the market continued to balance within yesterday's range with responsive sellers active at the 29.5 to 30.5 resistance. At this point, heading into the open, we have initial support at 1875 to 21, and on the upside, we have resistance at 28.5 to 30.5. How the market responds and deals with those zones is going to help set the short-term bias. If we break below 1875 to 21, and we are doing so on broad market weakness and some decent downside momentum, then it would signal sellers in control. It would mark a breakdown from yesterday's range, and that would bring 1475, 12.5, and the 0775 to 1075 support area into play. Now, 0775, 1075 continues to be larger time frame support, and buyers can be active there, especially towards the bottom of the zone. And the support zone at 2100 quarter to 02 quarter also continues to be decent support, and by that point in time, the range would be quite exhausted. So on the downside, even if we break lower, we don't necessarily have to go all the way down into the extended area at 2100 quarter to 02 quarter, but 0775 to 1075 would be very much within the range potential, but we will also keep an eye on 12.5 and 1475, and then also see whether the breakdown attempt below 1875 is happening on sufficient downside momentum and volume to really justify a directional move. But by the time the market gets into 0775, 1075, it would be short-term exhausted, and responsive buyers can still defend and be active there on first test, because bigger picture, our bias continues to be neutral as well, and we are still technically balancing within a range. On the upside, a breakout above 28.5 to 30.5 would signal short-term strength, but sell side can still be active at 33.5 to 35.5. We have a larger time frame high volume node there at 33.5 to 35.5. So that's still an area where sell side could be active on first test. And again, on the upside, a break above 28.5 to 30.5 has to happen on broad market strength and some pretty decent upside momentum. And if we're not really seeing sustained upside momentum, then the breakout could actually fail at 33.5 to 35.5. Beyond that, we have resistance up close to 41 quarter, 42 quarter, and 43.75 to 45.75, which marks a range extreme, and that would again be an area where sell side can step in. Same with 48.75 to 49.75 and 51.75 to 53.75. The more stretched you get to the upside into those larger time frame areas of resistance, the higher the odds of sellers stepping in and responding in a bigger way. So short term, our bias continues to be neutral. We're open to a move in either direction. The market is extremely balanced, so it can really tip to either side. But bigger picture, we are probably not going to see any strong directional movement ahead of the U.S. election. We're just 1 week away at this point, and there aren't really any major catalysts due on the time frame today. We have the Fed announcement due tomorrow. So, given the economic calendar and given the election next Tuesday, it's just less likely that we're going to get big directional movement, especially to the upside. And that's why above 28.5 to 30.5, even if there is a breakout attempt, we have to be very cautious on entering long on that type of breakout, because there is overhead resistance at 33.5 to 35.5, which could still be a failure spot, and the market at the very minimum could still struggle there. And then even beyond that, we'd have even better resistance at 43.75 to 45.75. And it's just very unlikely that the market's going to put in a very strong rally ahead of next week's election. So the higher probability scenario is either continued balancing, and that means that we can poke above initial resistance and still test that next zone and maybe even a little bit higher, but it's unlikely to be a successful and sustained upside breakout. Now, again, we are going to determine that in real time, but the overall bigger picture context doesn't really support a big upside breakout. So we just have to be more cautious with it, and we have to make sure that if there is a breakout attempt, that there are those underlying signals that are telling us that it's a legitimate breakout attempt. So there is a lot of upside momentum, broad market strength, AD at very positive levels and trending higher, the other markets participating in the move. All those things really have to line up in order for it to be a successful breakout. Otherwise, it can be prone to failure. On the downside, we could see a move into 0775, 1075 as the market kind of takes some risk off the table. So if we do break below 1875.21, there would be a higher chance of getting some directional movement to the downside rather than getting a big directional move to the upside. So, we are going to continue to be a little bit more cautious on long setups, and if we're getting good trade location and in real time we are seeing some signs of lack of strength or even outright weakness, then we can still be a little bit more active on the short side rather than the long side. But again, we do have to assess the situation in real time because the market can continue to balance within the recent range, and the recent range includes the 0775 to 1075 support, and on the upside it technically includes 4375 to 4575 and even upwards of 4875 to 4975. All of that is part of the range from the last week or two. So we can continue to balance within that overall range. So heading into the open, the question is, which way is the market likely to tip? Beyond initial resistance to the upside or below initial support? And that's something we'll have to determine in real time. So those are the main ideas heading into the open. Let's see which side really steps in terms of momentum, and we'll take it from there.